Hey, good Friday morning to everybody. Ben Buckner, Dan Bossy here to close out the week. We did have the U.S. Employment report. Ben will highlight that as we go forward. We got grain markets that are a little mixed. The wheat market's grabbing a little bit on the break relative to dryness in the Black Sea, though there's people like me that when we see pictures of the Black Sea wheat crop, we're headed or nearly headed. And so I wonder how much dryness will really impact it. That being said, the wheat market is trying to recover a little bit. We also see a pattern where rain has been moved forward. We have rain on the weekend now across the Midwest, but we got a dry slot next week. And I would imagine crop condition reports will be higher on Monday, at least those reports or ratings as they call them. So with Ben, I'll turn it over to you. We at Ag Resource advanced some cash sales overnight. Kind of give us the details of where we are here today.
Hey, I think it's still kind of dull is the theme, especially in the ag space. And we would call U.S. weather today certainly non-threatening, with an eye on the duration of dryness and the details, like always. But I think no one would complain really about sort of a prolonged period of sunshine next week. So I think that's all good. Otherwise, the U.S. unemployment report this morning, better than expected. And we're all kind of holding our collective breath following a really disappointing ADP jobs number earlier in the week. So we added 139,000 jobs in the U.S. I think, importantly, unemployment unchanged at 4.2% in May. It's something we've been watching in the background for a long time. I mean, the ebbing and flowing of unemployment is important. Once it starts to increase, on a monthly basis, it usually doesn't decrease. That's kind of an economic theory here. So we are watching out for recessionary trends, but we've avoided that bullet, I think, at least for the last month or two. And so thinking about consumer spending on energy, food consumption, I don't think any of that will be affected in the near term. So that's the positive news today. Crude's up a little bit. Financial markets are recovering from yesterday. So I think that sort of lends some support to at least new ideas of global food consumption for now. And I think to your point, Dan, we've got more rain, probably more abnormal drought easing in the central Midwest, and just kind of an abundance of rain in the Delta Southeast, where our clients are telling us that corn pollination is kind of imminent. And very few people have even used irrigation down there so far this year. So water availability pretty abundant. Where it's most needed, at least for now, the second half, second half of June is when that far southern corn crop pollinates. And so things look really, really good there. So kind of avoiding that issue as well. And again, you see kind of the dryness in the sort of western corn belt, which I think is probably welcomed at this point. The weather market starting though, so neither you or I or anyone watching this can do anything about actual weather conditions. So we just kind of got to be prepared for, I think, market's assessment of risk. For better or worse, it's all about yield perceptions, not actual yield. And so we're using the European model here, and you'll see on the left the 6 to 10 day forecast, and on the right the 11 to 15 day forecast. And so these are models the market can see every 6 hours. And again, prolonged sunshine, I don't think is going to be an issue for now, but we'll just kind of see. I mean, it's not a terribly wet forecast after the early part of next week. Is at the beginning of a trend? We don't know. There's a lot of nuance to summer weather forecast and weather details anyway. Just wanted to prepare, clients for, the weather market is going to start. What are the extreme nuanced details? I think that's going to be a driving factor. But at the same time, things that we have mentioned, let's say that there's some kind of weather scare. What do you do with it? And we're kind of finding, increasing evidence that we're transitioning into, a period where the U.S. really struggles to grow consumption. So census trade data yesterday, somewhat uneventful for corn and soybeans, nothing out of the realm of expectations, but wheat exports were lower than expected. Official U.S. wheat exports in April were below the FGIS reported number, which is not uncommon, but it does suggest that the USDA's annual forecast, since we can see what we shipped in May more or less, will be about 22 million bushels too high. So in their June WASDE, we think the USDA is going to trim old crop US wheat exports 20 million bushels. Ceteris paribus, throw this into stocks. These also become an increased new crop stock. So all of a sudden, 2025, 26, U.S. wheat in stocks may be approaching, according to USDA, 940 million bushels. So it's a very well supplied U.S. wheat market, and that's why we think explains the boring nature of wheat and why we're deflated in the market. And that market's just got to do something to clear excess stock. or discourage acreage expansion unless something changes weather-wise somewhere outside the U.S. So U.S. wheat stocks pretty abundant, I think, is one of the themes we've determined this week. And even in corn, I think, as we get into this weather market, again, something we've highlighted this week is what do you do with big changes in price based on weather? And our sort of fundamental research would suggest you do need a pretty big problem to meaningfully change the actual corn balance sheet. So we're a little higher than USDA on acres just because the rapid nature of planting early in the planting season. So 181 bushels an acre trend yield gives stocks above 2 billion bushels, an adequately supplied market. Even assuming a yield of 175, that's down 4% from trend. If that's the perception in the market, you're still, with stocks with needed adjustments to residual use. You got to lower that if you lower production. You're still at about 1.617 billion bushel in stocks. So is that enough to really get the corn market going for a long period of time? Now, again, there's going to be a wide range of scenarios we will be debating depending on weather issues or weather forecasts over the next 60 days. But that's something that we want to highlight is because of corn acres, more or less, you got to have a pretty big weather threat, prolonged dryness. And I think temperatures in July are going to be the big issue. And that's been the drag on global yields over the last decade or so. So what does that look like? So again, that's kind of unknowable today. But it's still to us, long-term trade deals, China specifically, and then kind of concrete U.S. or Northern Hemisphere weather threat is needed to engender short covering. And I guess today, going into the weekend, we don't really see any of those coming. So, and you might have some more details on weather and what happens as we kind of almost transition fully to the summer-like climate.
Well, thank you, Ben. I think that's right. And I'd remind everybody at this time of the year, because of the nature of thunderstorms, convective activity, it's the NAM short-term model, the high-res model that does best. So when you look at the EU or you look at the GFS, take it with a little grain of salt because it's going to miss a lot of those convective storm activities as they come over a ridge of high pressure. So no evidence of heat and dryness in the Midwest today, but we'll keep our eyes out and see where it all goes. Ben, any closing comments?
I don't think so. No, we're still kind of in waiting mode. We've got some seemingly positive news on U.S. and China, but again, want to remind people that the success of these negotiations are going to be measured in months, not days or weeks. So probably still a long ways off from finding that one demand driver that we've all been looking for. So otherwise, it probably is just the very, very nuanced details of U.S. weather forecasts over the weekend. So, et cetera. Sunday night forecasts are going to be important for the foreseeable future, and we'll revisit that Monday morning.
Okay, Ben, I would agree with you. And the one thing that gets my attention is China is telling its population today that it really wants to have the high-end chips, those NVIDIA chips that are going to be involved in AI. And I don't think the U.S. has a chance of selling it. So to me, those trade details are a ways off at best. Have a good weekend, everybody. We'll be back on Monday. Enjoy the weather. And thank you, Ben. And we all wish you a good trading day. Be well, everybody.